You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Well, good afternoon, everybody. It is August 21st on a Friday, and you are locked into the Grain Talk podcast. Lucas Peters here filling in for Mike Miner, who is having a little much-needed day off. And in the Pro Ag studios today, I also have Jordan. Jordan, how's it going today?
Good. How are you, Luke?
Well, we're getting by. Glad it's Friday. Glad the sun's shining. Have picked up a little bit of rain here in the Laverne area. I don't know if it's enough to matter, but at least it's starting to rain again this past week. Although there was a little bit of weather that you experienced, and our friends in Nobles County had some wind and hail go through as well. But we started off the week, as we look at these grain markets, overall pretty positive week on the corn and bean markets. Corn up roughly 25 cents across the board. Soybeans up, just shy of 50 cents. We'll talk weather, we'll talk pro farmer into that, but what are some of the other numbers or things that could have contributed to some of that bullishness this week?
Yeah, so, like you said, we did have a very strong grain market here this weekend. The demand side of this market continues to be strong. Not only the supply side is in question, but the demand side is strong. And exports this morning, we did see some very large export sales out of China, some of the largest ones we've seen in quite some time on the soybean side. So, we're finishing strong there, or starting the year off strong there, and we're finishing the year strong on corn export sales is where we're sitting at there.
Yep, that's it's always been good news. That's kind of helped us as through kind of the glut we had last week. At least the demand has been pretty strong, and the beans have picked up now with China. And now we got kind of switched gears to the supply side as we look forward to this next year. And we started out this week. I know when we came in the office on Monday, we were looking at the past rainfall from the past weekend. And locally, it's not like we had very much. But when you looked east, kind of through central Iowa, central Illinois, central Indiana, we were looking at rainfall totals of 3 to 6 to upward of 12 inches in places, and we were very curious. I remember on our Monday morning call we were talking of like, how does that affect a crop, right? If that type of rain happens in April, well, now we got planting delays and emergence concerns, all that. That's pretty obvious. When it happens towards the end of the growing season, we're always kind of curious, what is that going to amount to in the end? And we still don't know for sure, obviously. In those areas where the water's over the ear and flooding, of course, are gone. But overall, how does that concern? And we kind of made the comment a little bit like, normally we'd come in, if you saw that much rain in the middle of August across Iowa, Illinois, Indiana, beans should be down pretty hard in the week, right?
Yes.
You were saying like this should add X amount of bushels, right?
Correct. Yep. And that's spot on. And looking at that chart there on Monday, you've seen that rain kind of come across perfectly through Nebraska into Iowa and Illinois and Indiana. And the market wants to talk about all this excess rain out in Indiana. But the way I kind of see that is, there's a lot of acres through that stretch that received, 2 to 3 inches of rain in the middle of August. That is huge on a bean crop. And overall, we should really be talking about higher bean yields, where most wanted to kind of talk it down. And even the USDA a couple weeks ago wanted to pull bean yields down from 53 down to 52.7, and the market wants to kind of be 52.5 area. And now today you see Pro Farmer actually come through and post a 53.5 bushel yield or close to it and raise that. And I am totally on board with that. I really feel like this crop is finishing well. And even here locally where we've been dry all summer, you start to, pick up a little bit, 2, 3, 4 tenths, every a couple days here. And you start to think, well, shoot, we could really see some pretty decent bean yields here yet, including South Dakota.
Yep, and that's a good point. That Pro Farmer came out, and the first one on the beans kind of caught us a little off guard. Of like, whoa, that's a little higher than where we thought they'd be. Pro Farmer being above USDA is relatively rare, and the fact that that's a lot driven off pod counts and different things that they're finding in the field. But so the pods are there now that a giant area got much needed rainfall. Even like you said, in the dry areas getting a little bit. The beans number and the yield does seem to be growing a little bit.
Yes.
Compared to where the USDA came out on that August report. So I think that'd be something we'll have to watch here going forward is we're going to need demand to stay there to keep the momentum in beans because on the supply side, this crop might be getting a little bigger.
Yes, I agree 100%. And then when you kind of shift gears here a little bit and kind of look at Pro Farmers numbers on corn, they're coming down, right? We kind of seen that all week. Looking at their state by state estimates, they've been quite a bit lower than the USDA, including Illinois, which was really kind of eye popping, right? When you seen that come out there Wednesday night when they posted a 185 for their findings on Illinois, which was almost 30 bushels less than where the USDA is at. But then you kind of start to look at what they've done in the past years, and including last year, they were 15 off on Illinois from where the USDA's final number was, and now today they come out with a 173, which can be surprising, right? I mean, that is 7 bushels off of the USDA's number, maybe 7.5 to be exact, is where that's sitting at. But if you kind of look at the Pro Farmer Tour history, they tend to be over 4 bushels lower than the USDA, and including last year at 6 and 2022, I believe at over 7.
Yep.
So it's not at all surprising to see them under the USDA. It is, a big number there at 7. But now that the corn market has rallied 25 cents, like you said earlier, Lucas, in the podcast, we're trading 508.5 tonight. That is a new high for the move here, but not a new high for the contract. Contract high is a little over 511. Feel like this lower yield is kind of baked into the market now. And, with that 173, is the USDA going to be 180, 181, maybe a little bit less, but it's not normal for them to drop down to that Pro Farmer number. Pro Farmer tends to be under the USDA by a ways.
Yep, and I think that's good to recognize, right? Like that number was maybe a little lower than I thought it was going to be, but we kind of expected it to be lower than the USD anyway, because as you said, over the years they're generally 4 to 6 bushels lower than the USDA. I mean, they call it Pro Farmer for a reason, right?
Correct.
They're gonna get a number that's probably maybe a little bit more on the farmer thinking or farmer side, but that. When we compare it, I want to just a little bit to our crop tour, right? So we go out the first week of August, and the boys found 184 roughly for national yield at the first week of August. Well, then you take those areas and you look at South Dakota and Illinois probably getting a little too much rain, Nebraska, South Dakota not getting enough rain, Minnesota not getting enough rain. It's not surprising that the crop is getting smaller, I guess is the point where I'm trying to make is, first week of August, good potential. USDA came out in a couple weeks ago at 180.7, seeing a little bit of shrinking there. Pro Farmer goes out a little towards the end of August, comes in at 173. I don't think the final yield is 173, but we're probably trending down as we wind up this year on corn, kind of the exact opposite of what we just got done talking on soybeans. So, a lot to be written yet, right? We're not harvesting, but I would, based on some silage appraisals and things coming in, this harvest will catch up to us pretty quick, and so we'll start and get some actual numbers here over the next 2, 3, 4 weeks, and we can start solidifying where this yield is at. Is it closer to the 177 number? Is it closer to the 182 number? That will have to be determined. But it feels like the crop's not getting larger, I guess. Maybe I'll phrase it that way. Would you agree with that, Jordan?
Yes, I'd agree with that. And when you talk about that, I mean, a 180, 179 yield, maybe 181, that's still the second largest crop we've ever grown, right? I mean, it's still a very, very large crop. And the one thing I'd like to add to that is, the market today closed on March at 523, which a 10% stocks to use ratio equates to March futures at trading at 525. So when I say that, the futures market really has a little bit of a smaller crop baked into it, that's what I mean by that is, the March contract is trading 525, equivalent to a 10% stocks to use ratio, which is that lower 180 type yield.
Yep. No, I think that's good. That kind of wraps up the crop tour season, right? So we don't really have too many more numbers on that side coming out. Anything important that we're watching coming up here next week, Jordan, that you want to call out?
Yeah, I think you kind of hit on it there, Lucas. You kind of get past these farmer tours, and now you kind of, get rolling into silage, and then, we'll start to see some combines rolling here in the next 3 weeks or so. And at that point, we'll actually have some real information to kind of look at.
Yep. The last thing I would comment is, as we look, we're talking a lot about the 2026 crop. Don't sleep on the 2027 crop, because that is, we'll be planning for that here in the next few months if you haven't already. And some of those prices, those futures prices on corn and beans, are looking pretty attractive. Roughly $5 corn, $12 beans out there for 27 new crop. Something to think about on the crop insurance side. Since I am the insurance guy, I got to put a little plug in there for crop insurance. We're setting the margin coverage option prices right now. We'll kind of mid-August through mid-September. And so we're kind of in that $5 range on corn, $12 on soybeans on those prices. So if you are looking for a little different pricing timeline on the crop insurance, we'll be looking at that MCO product over the next few weeks and seeing if that would be a good option for guys to look at, locking, at least getting some price protection in for the 2027 crop. So don't sleep on that. With that, I thanks Jordan for coming in and filling in, and we'll sign off from the Grain Talk podcast.
Yeah. Thank you, Lucas.